that to you until
This is Alan Bush with ADMIS. In the stock index futures this morning, it looks like the main focus is going to be the Fed policy meeting. Today is the second day of the two-day Fed meeting. We will have a statement from them at 11:30 Central Time. There's a very good chance, according to recent polls, that they will announce a third quantitative easing program. In fact, about 66% of analysts polled believe that there will be this announcement at the end of the meeting today. It also is very likely that the Fed will announce that they will pledge to hold their Fed funds target close to zero into the middle of 2015. So that is an 11:30 statement from the Fed, and that is the main item for today. At 1 o'clock, we'll have the Fed releasing their projections for the economy and also their outlook for the Fed funds rate. And then at 1:15, we'll have Bernanke with the press release. He'll have his conference then. So everything focusing basically on what the Fed is going to do today as far as the financial markets are concerned. We continue to believe that easier credit from the Fed is mostly priced into the markets at this point. We also believe that any easier credit from the Fed will have a limited impact on the economy. Basically, this has been the case in the recent past. Any new easings of credit have had a smaller and smaller positive impact on the economy and on employment. Over in the foreign currencies, seeing gains in the euro currency being limited by reports that Greece is already having trouble politically with attempts to limit spending. That a bit of a negative, even though we have seen very strong gains in the euro currency recently. It also looks, as far as the US dollar index is concerned, that the Fed meeting today, if they do ease credit, could be a sell the rumor, buy the fact situation. This could be the last of the bearish news for the US dollar if the Fed does come in with a quantitative easing plan. Basically, this is bearish the US dollar from an interest rate differential point of view, but that appears to be fully priced into the market at this point for the US dollar index. Over in the commodity currencies, seeing the Canadian gaining on the Australian dollar today, we think that is a trend that is likely to continue as the economy in Asia and Europe continues to weaken, while the North American economy will likely hold up relatively well. And in the credit markets, yesterday's 10-year note auction, not especially well received. Today we have the 30-year bond auction. The focus here is going to be on the Fed statement today at 11:30 Central Time. This, of course, is bullish if they do announce more accommodation. However, if the accommodation is delayed as far as a statement from the Fed, the bullish influences that are likely to cause the Fed to ease credit will remain. And I think this is the dominant influence that will continue to take the credit markets higher, especially for the longer dated maturities. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
As independent and doing the right thing each month or each meeting when they